Alrighty, welcome to the live stream, everybody. My name is Kyle Seagraves. This is Dan Frio. We do this live stream every week at 3:30 on Wednesdays Eastern. So what we're going to do in this live stream is talk about what's going on with the market, what's happening with interest rates, and then also we want to answer your questions about mortgages or home buying or what's going on with the market. We'd love to be able to help you out. So there's a chat somewhere. If you're on your phone, it's down below. If you're on a computer, it's somewhere over to the right, which I don't know. I'm mirrored, so I can't tell which way it's going to be this way. But ask your question in there. What we'd love to know too, before we jump into some questions and talk about what's happening in the market, is where are you looking to buy? We'd love to know what city or state you're looking in. If you're not comfortable saying a city, just tell us a state that you're looking to buy in. We kind of want to see where's everyone at, because often I think when people get on YouTube and talk about buying a home, it's often just Austin. People are just talking about Austin, Texas, and San Francisco, and all these very expensive areas, when that doesn't represent the majority of people who are buying homes. So we have someone looking in New Lenox.
New Lenox, no kidding. You're not that far from us. Thanks for joining us.
One of the grants that we have, doesn't that qualify New Lenox?
You know what? I had it on my screen.
I'm trying to remember if that is or not. Kevin's in Wisconsin. Awesome. We have Sylvia looking to buy in North Carolina. David is closing in July, Fort Pierce, Florida. Congratulations, David, on that upcoming closing here. Sweet. So Dan, what have you been up to?
Watching this crazy market. So hopefully you guys, anybody that follows my channel, I am one of those crash brother doom guys, and I complain about them a lot. And I actually had
You are one of them? Is that what you said?
What's that?
You said you are one of them?
No. I tick off a lot of them.
I thought you said I am one of them. And I was like, what?
No, I apologize if that's how it came across. So I just posted a couple videos. The economic ninja, who's probably one of the poster children when it comes to the housing crash, he actually flew into town, and we sat down one evening and just had some cordial conversation back and forth. I posted both interviews. I just posted the secondary one just with about an hour ago. He will be coming into town in about another couple weeks, and then the gloves come off. That's when we're going to sit there and say, okay, here's the data you're giving, and here's the data I have. Let's compare these things and really hash it out. So I put in there, it was a debate. So just bear with it for now. It was a gradual move in. We'll get a little more heated as we proceed, but you guys stay tuned. But basically just watching the markets right now, everything, the concern right now, and it's not me. And folks, anybody that watches the channel or whatever, I don't like going political, because I don't want to have people judging me on what side of the fence I stand. But what I have to do is say, no matter what party's in control, I'm going to give you guys the truth. So the party in control right now, they're crazily spending. And I know the parties before that did the same thing. But the data that we have right now is the data that I'm sharing with everybody. So don't take it offensively or personally against me. It's just the views on what the government is doing. We even have Jamie Dimon, who controls the biggest bank in the whole country. He came out and said his three biggest concerns right now are overseas, all the conflict throughout the world, regulations, and the biggest thing he said is government spending, because there is a ton of government money being spent, and our government doesn't have money as it is. We're running a deficit. So the more and more deficit we have, think of keep maxing out your credit cards. We're going to have another budget deficit thing coming up here shortly that they're going to have to fight again to kick the can once again down the street. But I try to point out some of the areas that I think they're recklessly spending. And that is one of the biggest things right now that's concerning to all the markets, because it's controlling, or it's being affected by the Federal Reserve. So the Federal Reserve is monitoring all this data, and they're like, okay, there's just way too much debt. And then what happens is this debt has to be financed. So the government issues bonds. They throw those bonds into the market, and there's way too many of them right now. So what happens is it's like the housing crash or anything that you have way too much of something. Well, to get rid of it, you have to drop the prices. Okay, it's like a fire sale. Well, that's what's going on right now with bonds. Unfortunately, as the price goes down to find somebody willing to buy these bonds, when a price of a bond goes down, the rates go up. And that's basically what you're seeing right now. And then you have these daily movements in the markets. And if you really pay attention to them, most of them are tied to the Federal Reserve coming out and speaking that day, or some economic news coming in for the day. So what you have to really pay attention to is, what Fed official is talking for the day, because then you can get a feeling of what their bias is. So you'll have federal officials that sit there, and some are what they call hawkish and some are dovish. Okay, why are they labeled that? Well, the ones that are hawkish, they're always on the ground where we need higher rates. We need higher rates. We just need higher rates. The dovish people say, I think everything's kind of okay right now. We can sit right now, maybe even start to pivot and drop rates. And then you have those neutral that's sitting there and just saying, give me the data and I'm going to figure this out. So if you really pay attention to the person or the Fed official talking that day to the markets wherever, you can get a feeling of what happened. Like yesterday, Kashkarian, he sits on the Federal Reserve Board and he's a hawk. He came out and the stock market didn't do as well. And it actually blew I think a 5 or 6 day winning streak in the markets. And it was basically dubbed, comments from him, is what halted that rally. So basically, in a nutshell, we're just sitting here watching the Fed do what they do and watching the numbers come in to see, what the heck that's going to do to interest rates, because, what you're going to be talking about today plays a huge role in what house prices are doing. So that kind of is a segue right into, us talking about the housing market. Do we think it's going to be, a crash, a big rally time, or is it just, I've called the last 2 years, I think the markets are just going to stay steady, just nothing, just completely halted, because there's very minimum buyers and there's very minimum sellers.
Thanks for teeing me up. Now I'm going to use my Little League baseball skills that I went to a Little League game the other day, and there was some drama. I'll get it. I'll use your segue here in a second. I'm going to ruin your segue that you so perfectly teed up for me. It was strange. So it's all like, it's 7 and 8 year olds playing, and for some reason they have like 12-year-olds umpiring. I have no clue. Why is that a thing?
Because honestly, I'll give you the feedback. I coached Little League and soccer for probably 12 years. The parents are the ones that go crazy over this stuff. The kids don't give a shit. They're like, they just want to get done with the game. Hopefully they had a good game and go out and get some ice cream or whatever. And so they're giving these kids an opportunity to learn the game. The umpires make a little bit of side money. And half the time, if you have an adult, many times they don't even show up. But I apologize. I didn't mean to take over your thunder.
Oh no, you're good. It was funny because this poor kid has no clue how baseball works, apparently. Had terrible calls, but then all the coaches are like, what's happening? For instance, there's this, do you know what the time rule is?
They have that in Little League now?
Yeah. So basically, I don't know that much about baseball. Basically, there's this kid like 2 feet from home plate, and then someone in the outfield just called time, and so they didn't count the run. And so all the parents were like,
why would you call time every time the other team's going to score? Time out.
So everyone was kind of like freaking out a little bit, and it was just kind of funny to sit there and watch and see the drama unfold. And parents.
Who freaked out? The parents?
It was the parents, of course.
The kids don't care. They're just, woo, he scored. Oh, he didn't score.
And then somebody calls the director. The director comes in on the little golf court. Okay, so we'll get away from my Little League story here. What I wanted to talk about was this video that came out from Altos Research. In some of the live streams we've done before, we've talked about Altos Research quite a bit, and they come out with really good data. So I believe Housing Wire purchased them, and so they have really great national data, but then also really nice local data reports that you can get as well, which we can show maybe a little bit later in the stream if someone reminds us. So they come out with these videos pretty often, kind of giving a pulse of the market. And 2 really interesting things I want to touch on. And I know it's kind of small, but YouTube doesn't let me zoom in without resizing the window. Oh, wait. Okay. YouTube really sucks at letting me zoom in. But basically what they're showing here in this chart is each line is showing us over the year what's happening with weekly available inventory. And all inventory means is how many homes are available for sale in an area. So this is looking at national data. If you're looking at your local market, think about when you go on something like Zillow and you see there's 100 homes for sale in the city that you're looking in. That's what the inventory is in your city. And so what this is showing us is it's showing over the year, January to December, what's happening with inventory. And so we have 33% more inventory than last year. So more selection for home buyers, hopefully making it a little bit easier so there's less competition, potentially lower acceleration on home prices. As everyone knows who's been searching for a home prices have continued to increase and increase, and it seems like there's no end to it. Just increasing in home price. And what it looks like is through the remainder of 2024, that with higher inventory, that we may see that acceleration slow down. Now, it's something that I think a lot of people need to be careful of when we look at data like this, is that we gain some insight from it. But just because inventory increases doesn't mean markets bottom out, right? You can see every year has seasonal dips and increases in inventory. And then something else that was interesting in this video I wanted to highlight really quickly was price reductions. So price reductions are when you go on Zillow and maybe you saw a house that was listed 2 weeks ago and it was listed for $300,000. And then you get an alert that they drop the price to, let's say, $290,000. That would be a price reduction. So basically the seller is like, hey, no one's bidding on our home, no one's making an offer, so we're going to reduce the price to make our house more attractive for a buyer. So price reductions are a good leading indicator of what's going to happen with home prices. And a leading indicator is just basically, hey, when we get this little signal, we get an idea of what might happen in the future. It's not a guarantee, but this is what might happen. And so again, each year has some seasonality to it. Usually in the spring, there's a dip in price reductions as there's more competition for homes in the spring. And then usually in the fall and winter, there's an increase in price reductions because there's less buyers. So home sellers reduce the price to encourage more buyers to write offers on their homes. Now, what's happening here, you saw in 2022, there was this huge increase. And Dan and I were talking about this earlier. This huge increase is really closely tied to what happened in mortgage rates in 2022. And price reductions are really sensitive to mortgage rates because it's a lot about the demand that buyers have for homes. And so this increase was largely because we had a huge spike in interest rates. So there were less buyers than sellers were expecting. So largely across the nation, you had a lot of sellers who were increasing the amount of price reductions for homes. When you see this 33%, that's not the price cut of homes. It doesn't mean sellers are reducing the price by 33%. It means about 1/3, one out of every 3 homes for sale has a price reduction with it. And something interesting in this video that Mike highlighted was just this pretty sharp increase, a little bit earlier than we would expect for seasonality of price reductions. And a lot of this is because of what's been happening with mortgage interest rates recently, the uptick that they've had as well. And so if you're a home buyer seeing this, kind of the key points that I'd like you to take away from this is through the rest of 2024, it looks like the acceleration of home prices is likely going to begin to slow. And home prices we're expecting are probably going to flatten out a little bit, which that's good news if you're waiting on the sidelines. I was curious, I made a poll here of what everyone thinks is going to happen. And about the majority of people say it's going to be flat. And it's about even for people who say home prices are going to go up, and even for people who say home prices are going to go down. So it looks like most people are expecting home prices are going to stay flat as well. And then if you are a buyer, if you're out there shopping for a home, seeing that there's this uptick of price reductions means that sellers are likely feeling a little bit of the pain of they're not getting as many offers on their home, or maybe they're not getting any offers on their home in certain markets. And that might be a good signal for you in your local market to say, maybe I can actually offer a little bit less. So definitely check with your real estate agent, have them talk to the listing agent and see what kind of competition may be on that home, or how much heat is in that market. And you may be able to come in with a slightly lower offer as sellers are feeling some of the pressure of not having as many buyers to be able to choose from.
One of the comments that Mike did make when we did have him live one time is he said the norm is like 30%. 30% of homes usually have a price reduction because a lot of times, and if you talk to a lot of realtors, we did have a channel one time, or I was on a live stream with Rick Mahone one time helping Rick. I think that's his channel's name. And, it was me and I think 6 realtors. And, they attribute a lot of it to, like, for example, I was talking to my wife about a year ago and I'm like, hey, if we can get, an extra 200-300 grand on our house, would you be willing to sell? And she's like, well, where are we going to go? And I'm like, good point. So we were even thinking, if I can
Yeah.
tap out and get hundreds of thousands of dollars more than I thought my home was worth, I'd take it. But, I think a lot of people do that. It's like they just put the house, the realtor comes back and they're like, okay, here's your BPO. BPO is basically your realtor will come to your home and do a valuation on what you should sell the house for. And, being in this business long enough, and Kyle, this, if you ever talk to somebody, they always tell you, if you ask them what their house value, it's always pretty much inflated. We'll have somebody buy a house for 350 grand, last year, and they'll call now and say it's worth probably 500 because they put a new roof on, new furnace, and new doors. It's like, man, it doesn't work that way. So just to the point, a 33% isn't huge, and it's nothing to really, be shocked at all about.
Cool. Let's jump into some questions here. Miss Morgan had a question that doesn't show up. Basically, if a question comes in before we start the stream, it's difficult for me to find it and pull it up. But basically they asked about, with a buyer, real estate agent commission, how does that work for VA loans? And so for people who haven't heard about the NAR lawsuit that hasn't been finalized yet, basically a lot of people are under the impression that they have to pay for the buyer's real estate agent. Like they have to pay for the real estate agent when customarily it's paid by the seller. And that's not true. That's always been the case. It's just been more of like a customary thing. It's always been an option that the realtor could charge the buyer to help them close on a home. And so a lot of people have been kind of worried about how that's going to affect loans. So Fannie Mae, Freddie Mac, who make the rules for conventional mortgages, and then FHA as well, said that realtor commissions will not count against the limit from seller credits. So for instance, on a FHA loan, you can ask the seller for up to 6% of the purchase price towards your closing cost credits. And the realtor commissions, FHA said, will not count in that 6%. Same thing with conventional loans. VA hasn't yet come out with anything that I've heard. Have you heard anything from VA?
There was even a caption today that VA is behind the curve. They have to make a ruling on this like ASAP.
Yeah. And I think the tough thing for VA is VA has always had a rule that there is no commissions allowed to be charged to a buyer on a VA loan. So even sometimes there are some real estate brokerages that will charge like an admin fee of maybe $200 to $500, even though they're still getting a commission from the seller. And VA will not allow that. So it's going to be really interesting to see what VA says here. And I hope they align with everyone else. Otherwise, it's going to add to the difficulty of sellers wanting to accept a VA buyer if it's going to be difficult for them to pay their commission. Sweet. Who else do we have here? Robin is here. Hello, Robin. Thank you for being here as always.
Robin.
We have a couple people who are new. First time on a live stream. Thanks so much for being here. Let's see. We also got Anshu said hello, great content. We'll get to your question here in a second. Cool. Let's start from the top. We have here and ready. Kevin said, if I put 20% down, does my home insurance still need to be paid to the escrow account? You want to take it?
You can put up the timer. I'll put that one up. No.
Bing.
Yeah, anytime you're putting down 20%, there are some lenders who will allow you to do it at 90%. They're far and few between. But yeah, if you're putting down 20%, you do not have to escrow, meaning add your homeowner's insurance and your real estate taxes to your monthly payment. Kevin, just please, I hope you're a saver, because a lot of people get shocked when that tax bill comes in or the homeowner's insurance comes in and they're not prepared for it. I love escrowing because I don't have to worry about it. A lot of people are saying, well, I could put that money to use in the market or whatever. You're not going to get that much returns on the amount of money you're talking about. So
waiving it is like such a small amount.
Well, it depends on the state you're in. There was a person in here that says, real estate, and they're joining us from Illinois. I'm in Illinois. We have the second highest tax rates in the country. So when it comes to our escrows here, it can be sizable.
Simpler Garage says, is it different for a VA loan? If you're talking about escrows, VA does allow you to waive escrows on 0% down. Let's see. I'm buying a new build for the first time. Not really sure what the steps are, what my final closing costs will be. So when you're looking at buying a new build, it's definitely going to be good to talk with the sales rep of whoever that builder is and have them walk you through the different steps, because different builders are going to work slightly differently depending on how much you're customizing on the home, or you might choose to do inspections at different phases of the process. And then whatever lender you work with should be able to give you quotes of closing costs at this stage of the process, because you should have at least close to a finalized idea of what the home price is going to be at this stage. So outside of that, outside of the timing of what the builder is going to be doing with improvements or inspections that you want to do, it's going to be extremely similar to just getting a traditional pre-built home. Is it a good time to buy or to sell? That is a question that we cannot answer. As far as the market goes, that's always something that's going to be best for you individually. Is it good for you to buy or to sell? But timing the market is not something we can help with. Okay, who else we have in here? We have Robin. Tina said, "Hey guys, listening on the road traveling near Amarillo, Texas." Awesome. Thanks for being here.
There's a country song. What's that? Tina, you might know it. Amarillo. I forget what it was. I'm not
I have no clue what that is. Amanda, thank you for being here again. Amanda, a regular.
Hey, Amanda. Thanks for joining.
I wish I could give people like little badges or something. That'd be fun. Said, "Hey guys, with today's market, any tips on how to make an offer stronger?"
We get this all the time, and here's one of the calls that I get. It's better that you have a team, and here's what I mean by that. When you're making an offer, there's a lot of realtors out there that do a fantastic job at this. They'll make a whole spreadsheet, what the offer is. They'll include me on it, the lender. They'll provide, they'll ask me initially, is it okay if we give the person your information so they can call you and vet the buyer and all? I'm all in. Yesterday, we have a person buying this house. Okay. Follow me on this one. Well, the people that are buying the house that my people are buying or selling or whatever, this realtor, the 3 transactions down, called me because they're concerned because there's a lot of fallout. This was in Southern California. And I was on the phone with 3 realtors going over all the situations and validating to them, we have a good borrower, and we got the contract in last night. So it is getting the team together instead of you just throwing out, just all these offers and things like that. Also, a stronger offer, unfortunately, is still a conventional loan. Because conventional loans, people still have this stigma against government-backed loans like FHA and VA. They're like, oh, they take too long. They're really hard to get. It's all a farce. The biggest thing there is the appraisal is a little more tight. But other than that, it's easier to qualify. Has in most cases, it comes with a better rate and things like that. So how to get your offer accepted is a strong realtor and a team. Don't keep shopping your loan around, because the sellers, if they accept your offer and then you switch lenders again, they're probably going to say, oh, we don't even want to deal with this stuff. So just have a solid team put together.
Thank you here for the super chat. Maeve Z, I think. I worked a 1099 delivery job for 7 years now. Before that, I had 6 years at a warehouse job. Do I get a better mortgage approval with a new W-2 delivery job, or do I go find a W-2 warehouse job instead? Before that, I had 6 years warehouse job. Well, I guess it depends if you're going to quit
now.
Yeah, if you're quitting the 1099 job. So if you already have the 1099 job that you've been working for 7 years and you haven't stopped that, I would say continue. Let's use the 1099 income because basically what we look at with 1099 income is we're going to look at basically an average of the past 2 years. Now, we can add back things like the depreciation portion of mileage. And basically what we would do is we'd take a look at your tax returns, run it through a calculator. You don't have to do all of that math. But we expect a 2-year average of basically what your business doesn't earn in top line revenue, but basically earns in net income. And again, there are some things that we can add back to increase the income that we can use. If you're getting a new job, though, switching to W-2 is going to be possibly a little bit tough if it's going to be work that you're not paid as like a salary, or if you're paid hourly. Sometimes delivery work that I've seen, you get paid based on mileage or the jobs that you have, and that's inconsistent and can be a little bit tough. So basically, anytime you're switching, the type of income is when it gets a little bit tricky. Okay, you said yes. I'm going to quit the 1099 job because the profit is too low. If you're going to switch to W-2, the best option, if you're really just focused on getting approved for a mortgage, is going to be trying to go with something that has consistent hours or a salary that's going to be the easiest to get approved. Depending on the way that you get paid for the W-2 delivery job is going to impact things. So I know that's a complicated answer. I wish it was easier. But I'll leave my email here in the chat, and just if you can fill me in a little bit more on how the income is paid on both, we can give you a better suggestion there. One thing I will add is don't just focus your work on the best way to qualify for a mortgage. Please do the work that is going to be enjoyable for you and pays you best and accommodates the lifestyle that you want, not just focused on how to get a mortgage. Because worst case scenario, you need to be out that job for maybe 6 months to a year, and then we can use that income and you can buy a house.
Hey, at our next live event, would you mind wearing sunglasses? Because I don't appreciate Javier coming in here and ranting and raving about your blue eyes.
I don't think they're really that. I think they're like a blue-green.
Javier,
fake.
what about my distinguished beard, buddy? You didn't mention anything there. Thanks for joining us, man.
Let's see what other questions. Let me get back to where I was. Buying in Illinois is pricey with property taxes sky high. Yeah, the property taxes in Illinois are no joke.
It is crazy. I don't know if I ever told you mine, but it's ridiculous.
Hello, I have a pre-qual for a first-time homebuyer grant of 2% for the down payment and closing costs at 6.2% for a $650,000 loan. Interesting. If it's the one that I'm thinking of, it only goes up to $350,000, but it could be a different one. I've asked for a loan estimate, but they sent a simple breakdown instead. How do they have a low rate? So with most lenders, it's going to be difficult to get a loan estimate without having a property already picked out, because loan estimates are binding documents, and so without having a property, a lender doesn't have the ability to give you the most accurate loan estimate possible, and they can be charged or penalized for any differences in when you do select a property. So a breakdown is okay as long as it's giving you a detail of what's happening there. But basically, if you want to, you can shoot me an email. You can send me that quote and we can take a look at it and see, is there any points or is there anything in there that's abnormal that we can take a look at. But do you have anything else in there that you want to add?
I had a very common situation the other day, and I got kind of in an argument with the person. Now they don't want to use me. And here's the weird situation. It was very similar to that. And then they come back to me about 3 days later. They said, we're going to work with another lender. And I said, okay, was it something I did? And they're like, no, they're just getting me a better rate. And I said, so they quoted me something like that it was just posted up here. And I said, have you gotten a loan estimate? Because I can guarantee you there's going to be a ton of fees on there. So I didn't hear for about a week. And then all of a sudden I get a text, hey, they're charging me 1%. What's your fees and what's that? And I went back and I'm like, I told you so. I told you that was going to happen. So please, when you're looking, the one thing to take away from this, when you get these quotes, please make sure to look over all the numbers. Don't be just wowed over a rate, because you might turn the page to find out you just spent about $10,000 for that rate. And many times that can be avoided.
Let's see. Free money isn't always free money in my experience. However, they claim it's part of their program. Yeah, we can take a look at it. With grants, there are a few grants that are interesting. We have a tool called the Grant Finder. And basically, we have 3 different grants that go up to $7,500, and you can't combine them. But these grants, we usually stay away from recommending like a lot of down payment assistance programs, usually because they end up costing you a ton of money. Like you're mentioning, where's the money coming from? Why is somebody giving me free money? And with a lot of like FHA down payment assistance programs, they either have a higher interest rate or there's higher upfront costs. And so they can be helpful in some instances, but they're usually not super great. And these three different grants are mainly happening because there's Community Reinvestment Act funds available. And so lenders are able to take advantage of those. Basically, long story short, federal government's like, here's a pool of money. You have to lend in these certain areas by X amount of X date. And so these lenders basically are providing these grants. So through this, we can show you what grants you qualify for. And again, the reason that I was interested in the 2% down one that you have, I'm just going to fly through this really quickly to show the grants here. Is that we do have a 2% grant program. It's called the 1+, but it has a maximum loan limit of $350,000 versus the other ones don't have a loan limit. So that's why I was kind of thinking, I'm curious if it is the 1+ and someone just forgot about the loan limit when they were quoting that with you.
Wouldn't be surprised.
And then Javier in here with the grant finder, hardly know her. Got him. Let's see. Nick said, did rates rise today as expected with today's speaker?
So with the MBS market right now is down 13. So yeah, rates are going to probably pop up just, not much, maybe in the tune of, 0.03. But hey, Nick, I'm glad you must be watching my videos, because I did preach on the last 2 days on my videos, markets beware, because I also monitor, what Fed officials speaking and what side of the fence are they on? Are they usually out there kind of preaching or bellowing rates need to go up, or are they on the other side of the fence saying, well, we're at neutral right now, so there's no reason why rates can't come down. So and the markets are just, they pivot on a dime when these people talk. How many times last week, I think there was one day wasn't the market down like 700, and then the next day it was up 500, and the next day it was up another 200-300. So it surpassed where it was down. And it's just, there's earnings reports coming out. And that's another thing that I talk about on my channel. And a lot of earnings reports are starting to come in a little bit weaker than expected, but that's a whole, but yeah, rates are, they'll tick up just a little bit because of some of the Fed comments today.
And Shu said, hello guys, great content as always. We can always renegotiate on locked rates till the closing is my understanding. How much basis points, what's the difference should be that renegotiation talk? No, most lenders are not going to allow you after the rate is locked. It can't just change to what the market rate is. Now there's a couple things in here that you can do, and it gets kind of confusing when we talk about rates and locks because there's so much intricacy to it. So basically for a floated rate, that means that as the market changes, your rate's going to change. And then at some point, as you're under contract for a home, that rate is going to be locked. And every lender does this differently. Sometimes they might ask for your input on it. Sometimes it happens when they give a quote to you. But a locked rate means that it can't change with the market. And then once you close on it, it's going to be fixed for the life of the loan if you're getting a fixed rate mortgage. Now, let's say that you got your rate locked at 7%. You can still always choose to lower the rate by paying points. It doesn't change to the market rate, but it does allow you to either, basically you have that rate sheet that we can either pay down points or get a credit by increasing the rate. If you want to change to the market rate, with most lenders, that's not possible. We work as a brokerage. And so basically what we can do is if we have you locked in with one wholesale lender, one pool of money, and rates do drop quite a bit, then what we can do is take your loan application and move it over to a different wholesale lender without any work required on your part to get a better market rate. Now, that's something that we have to do a little bit earlier on. How many days would you say before closing, Dan, that's probably best?
Well, here, at least a week, because there's a lot of disclosures that have to go out. And if your APR changes by more than an eighth, we then have to redisclose, and then you can't close for 3 business days. So yeah, it's tough. So monitor this as you go through. But like Kyle said, once you're locked, the easiest way to explain this is this. I always use this analogy. You like Bitcoin. Let's say you like Bitcoin, and you see it's fluctuating all over the place. And so one day it's up a little bit, one day, and you're just watching this thing saying, well, when do I want to buy this thing? That's called floating. Basically, you're watching and you're doing. Once you buy or once you lock your loan, it's like buying Bitcoin. You own it. So if the next day if Bitcoin plummets, you can't go back to where you bought it and say, I didn't really mean that. Take it back at what I paid for it, and I'm going to buy it at a lower price. It doesn't work that way. What happens with rates is you get your rate sheet for that day gets timestamped the time that you lock in your rate. So you can have any variation of that rate, that rate sheet day rates, but you can't just go in and say, I don't want that rate anymore, I want a lower rate. There are areas where you can do that. The rate would have to change in many cases by at least a quarter. Some banks are half a percent, I'm sorry, but you will have to pay a fee for that. So that's kind of the misconnection. Now, what we say a lot of times is, because we're a broker, is if we lock you in, and let's say the Federal Reserve comes out 2 days after that and rates comes tumbling down, we have the ability to go in and withdraw your loan from that lender that we have you with and put you with another lender to take advantage of those lower rates. But if you're working directly with a bank or a credit union, you cannot do that.
Mm-hmm. What are your thoughts on Dream for All versus conventional? Dream for All is a cool program, but if you are able to get it, it would be amazing. So it basically functions like, they call it a lottery, and I don't know if the cutoff has happened yet or not. Basically, we looked at doing this program last year. We had over 200 people who were interested in getting this, and no one was able to get it. So the funding this year is even more limited than what it was last year. So we just decided to not work with it because it got people's hopes up for buying with this program, and then no one was able to get it. So it really functions like a lottery where they're pulling random applications for you to be able to get the program. So unfortunately, I think what is happening with this program is a lot of people are banking on it to buy a house, rather than saying, I want to buy, I'm prepared to buy with a standard loan. And if I happen to be able to get this loan or the Dream for All program, great. Yes, go ahead.
I got an update. It opened on the 29th of April. It filled up on the 30th.
Yeah, that sounds about right.
Yeah. So I didn't mean to, I apologize for interrupting you. I just looked it up and it was, I knew it when it became available on the 29th. I'm in there right now. The Calahefa Dream. The program received over 18,000 submissions, or we're working quickly to view the audit of the applications, but it says is now closed.
Oh, okay. Well, never mind. Yeah,
so that's why we didn't, like Kyle said, we had hundreds of people pre-qualified last year. We did not close one of them. So that's why this year we weren't even taking applications for them, because they filled up within 24 hours. They used up all their money. So
yeah, and so all those people who are in that, they will hopefully randomly be selected, but it's not going to be that many people, unfortunately. Amanda, feedback regarding having the underwriting process completed in advance. How does that work? You want to take that?
Yeah. So most cases, people end up getting a pre-qualification. Okay. There is the distinct difference, and we now has switched all of our paperwork to pre-qualification unless somebody really wants a pre-approval. And the difference is this. Here's I'll pull this curtain behind the scenes on what we do. Okay. You fill out your application, we pull your credit, and then we run your loan through two entities. It's Fannie Mae and Freddie Mac. It doesn't matter if you know who they are, but everybody does it. It doesn't matter if you come to us, Chase, Wells Fargo, Rocket Mortgage, whomever. We all use the same system. Okay. So we take your application, we have your credit, we upload your loan into those systems. As long as one of them comes back and says approved, you're good to go. Okay. So we'll send you a pre-qualification. So now what does it take to get pre-approved? Well, now we have to validate all the data that you put in your application. So for example, let's say, Amanda, you put in there your income was 50 grand. Well, we have to validate that. How are we going to do that? Pay stubs and W-2s. You might say, I have $10,000 in the bank to use as a down payment. Well, we have to validate that. How do we do it? We get your bank statements and so forth. So if you really want a pre-approval, it's probably going to take an extra 3 days or 4 days. You would send us all that information. We send all that information into the underwriters. They physically underwrite it and send it back to us. The problem why most people don't do that is, I think this morning we looked at our pipelines, and we had over 700 loan approvals so far this year. We usually close about 30 loans a month, so you can figure out the numbers there. All right, so we have a lot of people that never went through with things and so forth. So it would take us 24 hours a day, 7 days a week to get every person completely approved before we sent you out the approval. And let's say 75% of those fall through. So it's just be a lot of wasted time. But if that's what our buyers deem that they really want, we'll do that for you. But that's the biggest difference between a pre-qualification and a pre-approval.
Javier said, seems like a program that generates leads instead of actually helping people. Yeah, I think they initially tried to help, but I know a lot of people have been using it kind of as like a lead gen thing. The issue is just that again, like I was saying earlier, is a lot of people, it really functioned more like a lottery, I think, than actually helping people, because we found that it was like, well, if people didn't have this program, then they actually weren't interested in buying a home at all. Almost similar to like, when like HGTV does they have their home thing that they give away every year. It's like, those people aren't interested in actually moving somewhere, but they want to get a free house. Same thing with this, is everyone's like, I want to get a free, in California, 20% down is, I want to get a free $150,000. I mean, eventually you have to pay it back, so it's shared appreciation. But that's what we kind of found, is like, oh, this just is not set. This is not overall good. This is not helping out.
Hey, Italian beef and hot peppers. I'm answering Javier's question. You got to have him on here more often.
Javier said, ask where people are watching from to have people. Well, we did that earlier, but for people who are new here, Javier is giving us some engagement tips. Tell us
he wants to know what the favorite toppings are on your pizza. I don't know how to type in this thing. So, okay, my bad. I'll shut up.
Add your topping, or where are you from? You can just put a state if you want to. Where are you looking to buy? Let's see, Novus. For the Q&A, I'm thinking of renting my home to buy a second home. Okay. In my mind, I was thinking like a secondary home. Were you thinking the same thing, or is that just my brain?
I get that a lot, where people, especially the question, after we answer this question, show them where they can go to the website and ask questions. I get this quite a bit, and it throws me off. I think of a second home as, you live in Chicago and you have a second home in Miami. It's your second home of your life. So my apologies on that.
Would you advise against buying a second home using a DPA grant program, since it's kind of free money, or would you think it's a better idea to sell instead? Well, just a really quick answer here. With your first home, you probably have a lot of equity in it, I'm imagining, depending on when you bought it. You may be able to use a home equity line of credit to then use that as a down payment for your new home. That's probably going to be the least expensive way, rather than going into like a down payment assistance program. However, with a grant program, that may work. The only, I'm trying to remember, I think 2 of the grants allow you to be a first-time home buyer. Oh, let me jump back down in here to what it is. 2 of the grants, I'm sorry, only 1 grant doesn't, or allows you to buy a second home. The other ones require you to be a first-time home buyer. So I would try out the grant finder to see which ones work for you. And then I would also consider doing a HELOC to use the equity from your current home to then help you with the down payment on the new home.
If you guys have questions, especially after the broadcast is over, would you mind showing them where they can go to ask a question on your site?
Oh, yeah. Yes, I can. So if you do have a question, you can go to winthehouseyoulove.com, and always on the stream, these buttons never have color to them for some reason. But basically you just click, I have a question first. And what happens is you will be able to type in your question there, and that comes into a database that comes to Dan and I, and we'll reply to your question with a video. So we'll press record and then actually give you a reply similar to how we would do on these live streams. And this is a really great option if you're like, you just have one little hurdle before you take the next step, or you need something clarified. That's a really good way that we can help you out and answer your question. Obviously, since we're doing a video for you, it might take just a day or two. So if you have an urgent question or you need to get pre-approved quickly, then you can go to our website with, up here, whenthehouseyoulove.com, and schedule a call. That's the quickest way to get a pre-qualification. But if you're like, I just have a general question, I don't want to talk on the phone with somebody, just go to our website, ask a question, and then we can reply with a video for you.
Anybody like New York pizza? Daniel.
I know this is probably gonna kill you, but I hate Chicago pizza.
Come on, buddy. Well, then next time you're up here, I won't take you for pizza. We'll just go to Cookout. You know what? Yeah, it's funny. I think a lot of times it's from where you grew up. Like my son, he's engaged to a young lady from New York. When he goes there, he's like, the pizza's terrible. But she thinks Chicago pizza is terrible. So whatever. It depends on what kind you get as well. So there's deep dish,
That's fair.
there's this, there's that. So now let's get back to mortgages. It's more intriguing.
Daniel said, would you recommend to pay extra principal every month or in one large chunk once a year towards your mortgage? Mortgage interest is going to be recalculated every time you do make that payment. So it's going to save you a little bit of money. I don't think it's going to save you a drastic amount of money. I think as far as just budgeting, I would choose to pay every single month extra. Again, you're going to have some slight savings there. It's not going to be life-changing than doing a large chunk, but I would do every month.
Good question.
Jonathan said a 3-2-1 buy down with a $20,000 seller credit and refinance after 1 year. Can the money in the escrow be used to permanently buy down the rate? Would that be considered still paid by the seller?
No, that's perfect. That's why we propose in today's market. And I don't know when it's going to happen, but rates will come down eventually. Okay, so let's just assume that that's going to happen. On the 3-2, the buy downs, how it works. If you do a permanent buy down, so Jonathan, in your case, let's say you're going to get 7, but you paid a bunch of money and you got 6. Next year, rates go to 5.5. You refinance to 5.5. All that money's lost. So what we'd recommend is doing exactly what you said. So that 20 grand is going to go into basically like an escrow account. Every month, a little bit of that money is going to come out to subsidize your payment. But that money left over, once you refinance, is going to come right off of your payoff. Okay, so that it will be netted out. I think they're going to net it out. We haven't really done one yet. So sometimes what happens is they'll come back and they'll net it out, or they'll actually come back with your real payoff. And then once it's paid off, they'll send you a check for the differential. I don't know how the lenders are going to do that, but that is the reason why we strongly suggest doing the 1 buy down, 2-1 buy down, or the 3-2-1 buy down. So you can capture when the rates do drop, you're not going to lose all that money that you spent on the buy down. But fantastic way to do it.
Pablo said, what's up, guys? What do you think about a co-op or cooperative houses? Is it a good investment? I'm not super familiar with co-ops. That's just not something that we do or run into a lot, but
I'm working on one.
Okay.
Only New York will do them. So we can do purchases in New York on co-ops. Other than that, honestly, and I'll be blunt with you, I've never done one. Now Kyle and I work at a federal bank, so we get loans from all over the country. And I got one right now that the people they're looking for a property, but I was able to get them approved using the co-op, but we can only do it for purchases.
Martin said, hey guys, I'm in the process of buying a fixer-upper in cash for the first time. What would be the best loan option for me after the remodeling, taking into account I do not own a house, but I'm not sure if I want to move into that house, sell it, or rent it?
To me, it's a lifestyle. And here's what I mean by that. I don't like having rental properties. I had them for years and I hated it. I made money. I lost money. But I just couldn't, I didn't have a property manager. It was some of the properties were in Chicago. So that was tough. I won't go into the details there. I had properties in Florida. I had property managers there. They were terrible. I didn't like it. And that's me personally. So if you don't mind, being on call, if something happens to the house or whatever, or chasing payments and things like that, God bless you, maybe rent it out because you'll probably have a great ROI. Um, that's my recommendation. Are you at all versed at having rental properties?
No, I think I would hate it, to be honest with you.
I just don't have the mentality for it or the patience and anything else. So
Martin was asking about the type of loan that you would suggest.
conventional loan. I mean, so let me just explain real quick the options that you got. So this might fill the void for some of the other questions that we might have. When you have a property that is not going to be deemed your primary home, the only options you really have, you can't go with an FHA loan because it has to be your primary home. You can't go with a VA or USDA loan, has to be your primary. So you can go with a conventional loan, or there's programs that are called non-QM, and you can do it that way. But those rates are much higher, and most of the time they'll charge you points and a lot of fees. So you're kind of, I'll go down to almost your only option would be a conventional loan.
Cool. Let's see what else we have in here. John said currently pre-qualified for about our budget. In September, I'll qualify for moderate housing. Should I wait or shop around now? Can you tell us the pros and cons of affordable moderate housing? I think Javier, did you reply to this one? I think you might have. Saying, where is it at? I don't know. I can't
What
find
does
it
he
anymore.
mean by moderate housing?
I'm not sure exactly if you can clarify that, John. But basically, if you're qualified, but you're going to be looking to buy in September, then I don't think it's necessarily worth shopping around for houses right now. But what you could do is always go into open houses if that is something that's available, to just get an idea without having to schedule like a showing or something like that. He said moderate income housing.
And why September you'd be eligible? That's the thing that threw me off.
Let's see what else we have. Soma said, do you know when and if the $10,000 tax credit for first-time homebuyers will go into effect? And could it be retroactive for homes purchased in 2024? At the moment, every tax credit like that is just a bill that hasn't been passed yet. And so until those get passed, then they're just really not worth anything. I used to talk about some of the bills that were coming up. I know a lot of people talk about bills that are happening and they're like, there's a $10,000 credit. There's a new $25,000 credit. It's just not worth talking about because it's, they're just bills, and they're not real yet. And there's no chance of it being real until it's actually signed and effective. So there's nothing that exists currently. And if, as soon as something does actually pass, then we'll absolutely talk about it and help you figure out all the details of it. But it just feels gross to me to kind of talk about these grants and people get excited about it.
Politicians always promise you prosperity and lower taxes and this and that. This proposal's been on the table since the administration took place. So it's been on the table over 3.5 years. It's probably not going to go through. It's a good talking point, but I don't see it going through. There was one. Remember about 2 years ago, Bank of America came out with this huge like 10,000 credit thing and whatever, and it made national news, and it was just a complete farce. And I'm not trying to throw cold water on all this, but that the $10,000 proposal has been out there for about 2 years, I want to say.
Since rates have dropped a bit, would it be a good time to lock in my rate or just wait till I close end of June?
That's a day-to-day thing. And again, how I'll explain this is rates change every day and they can change multiple times a day. So it'd be like, well, do I want to buy that Bitcoin or do I want to buy the stock today? Or do I want to buy at the end of June? There's a lot of time in between there. So you might not watch my channel on a daily basis. Kyle and I work together, just so you know. I would highly suggest you do that. It's therateupdate.com. And this is exactly the question I answer on a daily basis. I tell you, it's kind of a boring 5 minutes to watch, but if you're in the market to buy a house, it's very important because I go through where rates are. the economic calendar and the events taking place that day and for the week, and then my perspective of where that's going to take rates. And we do it every day. So that's what I would highly suggest.
Okay. If my husband bought a home 2 years ago, I'm not on the mortgage. Can I buy my own house as a first-time buyer? Yeah. So a first-time buyer actually depends on who's on the title and not on the mortgage. So if you haven't been on title to a home in the past 3 years, then for most programs that is a first-time home buyer. So you should be able to qualify as a first-time buyer. And then a lot of the programs that do require you to be a first-time home buyer would still allow your husband to be on the loan and on the deed with you. Usually they only require one person, not everybody, to be a first-time home buyer. Let's see. Cool. So we're about at our time here. What we have is, I want to show you our website here. It's winthehouseyoulove.com. So what you can do is schedule a call with our team. So what you'll do is just answer a couple quick questions, and then I'm like a little off center here, hiding in this bubble. So basically, instead of us like chasing and doing phone tag back and forth, it's just really easy to go ahead and pick a time on our calendar that works for you. Then you do a 15-minute application. We'll just ask you questions about your income and where you're looking to buy. From there, we'll show you your quotes. So what loans you qualify for, your interest rate, monthly payment, things like that. And then you can shop for a home if you want to. Now, there's no obligation in this. You can sit on the sidelines and continue to wait out the market and see what happens. If you just want to be in that stage where you're approved and waiting and ready to buy a house when it comes available. So thank you all for being here. Again, if you have any additional questions, you can go to the website, winthehouseyoulove.com. And then we will be live again next week, 3:30 Eastern, same time, same place on Wednesday. And we look forward to seeing you all there.
Take care. Thanks for joining us.